What happens with the costs associated to abortive purchases? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Anyone who invests in property will at least at some point have probably found that they're involved in an abortive purchase, which is where you've tried to buy a property and unfortunately, for whatever reason, whether it's you pull out or the vendor pulls out, the property hasn't been purchased. This is an unfortunate situation because normally, hopefully, you've not incurred too many costs, but costs may have been incurred. So what happens to those costs? Well, let's look at this in a company today and how it all fits together. Now, obviously, if you've been looking at property and you've been viewing and you've been doing mileage and things like that, all of those will be treated as a revenue expense. So they'll be allowable as travelling to go visit the property, parking expenses, if it's out of area, your hotels and all those sorts of things will be in line with your normal expenses. However, at the point you've made the decision to purchase that property, you'll have started the ball rolling on a whole host of other expenses. The first one likely to be your legal fees. Now, depending how far through the process you get, there may be other fees that you have also incurred, such as lending fees, product fees, maybe bridging costs. You may have gone through the survey and it's at the survey point where you found that actually there's issues with the property that you're just not willing to take on. So at this point, you may have incurred a whole host of different expenses. Now, we said that the trying to find the property expenses were allowable, but what about these expenses that we've now incurred, which are all in essence capital in nature, because they're all to do with the property purchase? And unfortunately, I am the bearer of bad news to say these are not allowable expenses for the business. They're allowed to be included as a company expense, but they're not allowable for tax purposes because they're not related to an actual investment that you have purchased. So they will be costs of your company, but they will not be allowable for tax and they won't reduce your corporation tax bill. Now, there have been a few tax cases which cover off management expenses and what classifies as a management expense and what doesn't in these sorts of situations. And the general premise is whether we're looking at something that is a revenue expense or whether it's a capital expense. Now, for the things that I've just described, which is the legal fees, the survey fees, the product fees for that specific property, these generally would all mostly fall within capital expenses, so more long-term expenses on an asset that you were looking to purchase. Anything that could be treated as a revenue expense or a management expense could be put through and may be allowable for tax purposes. But as we say, you'd need to look at each of the different transactions, each of the different costs to see whether or not they would be allowable for tax purposes. So the key thing here is if you do have an abortive purchase, that you need to make sure you keep track of what expenses you do incur and just make sure you've got sufficient description and explanation of what they are. This will allow any tax advisor you work with to assess each of the different transactions to see whether or not they will be allowable for tax purposes or whether they won't be allowable for tax purposes. Obviously, every little helps when it comes to reducing your tax bill, so it's very crucial that you keep good evidence to show what you have been incurring. Hopefully you don't have many aborted purchases, but I know from personal experience, sometimes it's just the way it's got to go. And I know I've had a couple over the years which we've pulled out of because it didn't work for us. I know we've had vendors that have second guessed themselves and maybe things haven't gone ahead with them. So it does happen, and it happens more regularly than we think. And obviously with any of these sorts of transactions, the idea is to minimise any costs that are incurred for all parties. So if it's going that way, the sooner you get out of it, the better, because the costs may not be allowable and you don't want to be incurring too much if you can help it. One of the key questions for your property investment business is going to be the test of whether the expense is in relation to managing the business of your investments, or whether it's related to the property. If it's a cost you can associate to managing the investment business, then it's probably more likely than not allowable. If it's more specific to that property purchase that you've not gone ahead with, then unfortunately it's going to probably be capital in nature and therefore not allowable for tax purposes. But do keep track of all the information, do keep notes of what has happened, because then that'll allow any tax advisor you work with to review the position and see what can be put through as allowable and what unfortunately is not going to be allowable for tax purposes. As with any expenses, if this is going through your company, it's still a company expense, so it will still be treated as a company expense. It's just it won't minimise your tax bill. So don't think, oh, if it's not going to get me tax relief, it's not worth putting through my company. It is definitely still worth putting through your company. It is just you're not going to be reducing your corporation tax by that amount, unfortunately. Finally, good luck with your property purchases, and I hope you do not have many abortive purchases and everything goes through smoothly for you. However, this is just something to be aware of, and hopefully you don't have to be too aware as you are completing on all your property purchases instead of unfortunately walking away for whatever reason. Hopefully today you've discovered what happens with those expenses you've incurred, but unfortunately the purchase didn't quite go through. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing. Let's make tax less taxing.